So, importance of data sets and statistics in investing.
So investors have to understand the history of capital markets to understand the distribution of past outcomes.
Yeah.
It gives you an understanding of what was the average and what was the range,
Yeah.
which is basically looks like a bell curve of past outcomes. And if you don't have that information, you have no idea what to expect with your investments. Both the expectation of a return and the expectation of the variability of these outcomes.
Yeah.
And that is why we need to look at large samples of past returns,
So when you say
which you might call history.
large samples, how many years are we talking about?
So you need a minimum of 30 years. So if you go look at sampling in Wikipedia,
Yeah.
you'll see a typical sample size for just about any kind of analysis of data starts at about 30 samples.
Okay.
We prefer to use 50 years because when you look at stock market data, it's a lot more variable than what people are usually measuring in statistics. We have enormous variability of stock market returns. And so the more variability, the larger sample you need,
Yeah.
so that you can draw conclusions from that data.
With some certainty.
With limited certainty.
Yeah.
Listen, there is no amount of data that's going to give you any certainty about what investors should earn in the future, partially because nobody knows the events of the future. I mean, who would have suspected? Well, I guess a couple people made some guesses about what happened in 08 and 09, but it was very, very, very few people, literally like 2 or 3 people, that they did the Big Short film about and book.
But still, if clients did not make any changes in 2008, like if they did not cash out, they did really well.
They did just fine. That's what we showed in our behavioral gap study.
So these
now, I wouldn't say, so when you say they did really well, that's all relative.
Yes.
So it depends what period you're looking at. We can look at a 50-year return.
Yeah.
But if we look at a 5-year return starting November 07, which is the beginning of the financial crisis, that's not going to be the same return that we've seen in the 50-year area. But they didn't lose money, and but also they didn't get. I wouldn't say that they earned returns greater than the average return given a 50-year period.
Yeah.
But they were not harmed over, let's say, 5-year period to hold that portfolio.
Yeah.
Other than they didn't earn the average.
Yeah. So data sets and statistics play a huge role in investing, and that's what IFA portfolios, we take advantage of it, and not advantage, but that is the foundation of
So Venkat,
how we look at
Yeah, I want to expand on that just a little bit because it's so important. When I started looking at the research, I was shocked that there were all these journals where academics published their papers, their peer-reviewed, empirical research papers, the Journal of Finance and this kind of thing. And when an academic presents a hypothesis in a paper, the number one thing they need to do is they need to have statistical significance about their data.
Yeah.
If investors don't understand that, it is a very small chance they will be successful investors.
Yeah.
It is one of the most important things that you understand statistics.
Yes.
And because so few people understand statistics, it's rare that we see successful investors on their own.
Yep, that is true. Any ideas how clients can prevent performance chasing and stick with the financial plan?
Well, the number one thing they could do is hire an investment advisor. I know that sounds self-serving, but I just explained how rare it is that somebody has a good understanding of all these concepts. They can improve their chances of holding on to the portfolio through all kinds of volatility by getting a coach, an investment advisor who's a fiduciary, who is looking out for their best interest and can show them the information, the charts, the graphs, the research at a time when it's most important, when their emotions are running really high to want to alter their investment strategy.
Yeah.
That's the perfect time for us to provide the education to them that will get them to calm down.
Yeah. So this is, the education is one of the key things that IFA provides to clients, and it's evolving. I mean, we do it every day. It's
I
not.
think education is a hallmark of IFA's difference compared to pretty much all of the other firms
Yes.
I've seen out there. I think we have an exceptional offering of education,
Yeah.
and I'm not aware of any firm in the whole world, literally, that provides a higher quality education than we've done through our website and our app, with our articles and our videos and our book and our films. I just think we're unsurpassed there, and if there's something out there you think is better, I'd love to hear about it.
So can investors download our app from the App Store? Is
You
it
just
available?
if you go to the Apple App Store and you search Index Fund Advisors, it'll come up there. I urge you to download it. We've made it really almost fun and interactive to play around with by having all these little icons that direct you to sections of the app.
It looks colorful and beautiful.
It's it's very colorful.
Yeah.
And it's just right there in the palm of your hand, and it makes it even easier than it was before for you to get over your thoughts of speculation. It's an amazing amount of effort to create these apps. It's a whole it's a whole different set of coding versus doing an app site or a website.
Yeah.
And the two of them, they're really very different, and it requires an enormous effort and a lot of capital and a lot of time.
Yeah.
And so it's why why you don't see these from most registered investment advisory firms.
Yeah.
It's only those that are funded by enormous amounts of venture capital that you would see apps, from some of these other firms. But when we look at the advisors that are approved to have their clients invest in dimensional fund, I don't see any firms that really have a quality app on the phone.
Absolutely.